Welcome back to XRP Insider, the channel where we break down the biggest crypto stories shaping the market right now. Today's update is one that has investors across the world paying very close attention because Bitcoin, Ethereum, and XRP are all facing growing selling pressure as fears surrounding the United States and Iran continue to shake global financial markets. What looked like a possible peace breakthrough only days ago is now surrounded by uncertainty after military activity near the Strait of Hormuz created a fresh wave of panic among traders. Crypto investors were hoping for stability, but instead, volatility is back in focus, and the market reaction has been immediate. Bitcoin is struggling to maintain momentum, Ethereum is slipping under major support zones, and XRP is once again fighting to hold key price levels while bearish sentiment spreads across the entire crypto space. Right now, traders are watching every headline because geopolitical tension is starting to directly impact risk assets, and crypto is feeling that pressure in a major way. The biggest concern moving through financial markets today comes from the recent military strikes carried out by the United States around southern Iran near the Strait of Hormuz. According to reports from U.S. Central Command spokesperson Captain Tim Hawkins, the strikes were described as self-defense operations intended to protect American troops from threats connected to Iranian forces. However, despite the official explanation, investors are becoming nervous because these developments could completely change the direction of peace negotiations between the two countries. Markets hate uncertainty, and when military activity escalates in one of the most strategically important oil regions in the world, fear spreads fast. That fear is now reaching crypto traders who are already worried about inflation, weak market momentum, and declining investor confidence. The result is a broad sell-off hitting Bitcoin, Ethereum, XRP, and most major altcoins as traders move away from risky assets and prepare for more volatility ahead. At the center of this story is the question everyone is asking right now. Can the United States and Iran still reach a peace agreement? Or are things moving toward a much more dangerous confrontation? Iran's Islamic Revolutionary Guard Corps reportedly stated that the country has the legitimate right to respond if ceasefire agreements are violated. That statement alone has increased fears across financial markets because investors understand that any additional escalation could create major disruptions in energy markets, global trade routes, and international economic stability. Even though diplomatic talks are still happening in Doha between Iran's Foreign Minister Abbas Araghchi and Qatar's Prime Minister, confidence remains weak. U.S. Secretary of State Marco Rubio admitted that negotiations are still moving slowly and involve intense back-and-forth discussions over the exact wording of the agreement. Traders are now waiting to see whether diplomacy can calm the situation before markets react even more aggressively to the growing uncertainty. As geopolitical pressure rises, crypto market sentiment has clearly shifted into fear territory. According to the Fear and Greed Index, sentiment improved slightly from 30 to 34, but the market still remains deeply cautious. That tells us investors are not yet convinced that the worst is over. In fact, many traders are preparing for more downside because inflation concerns in the United States continue to remain elevated, while global instability adds another layer of uncertainty. Risk appetite has dropped sharply, and when fear enters the market, speculative assets like crypto usually face heavy selling pressure first. Retail traders become hesitant, institutional investors reduce exposure, and momentum weakens very quickly. That is exactly what we are seeing now across Bitcoin, Ethereum, and XRP. Even temporary price recoveries are struggling to hold because sellers continue stepping in every time the market attempts to bounce higher. Let's start with Bitcoin because the king of crypto is once again sitting at a critical moment. Bitcoin is trading near $76,000, and technically speaking, the market structure is starting to look increasingly bearish in the short term. One major issue is that Bitcoin remains below the 50-day, 100-day, and 200-day exponential moving averages. These moving averages are acting like strong resistance zones stacked directly above the current price, which means every rally attempt is running into selling pressure almost immediately. Traders often look at these indicators to determine market direction, and right now they suggest that bullish momentum is fading. Even though Bitcoin is not in an extreme oversold condition yet, momentum indicators like the Relative Strength Index are drifting below neutral territory, signaling weakness. Unless Bitcoin can reclaim those major moving averages soon, bears may continue dominating price action over the coming sessions. What makes Bitcoin's situation even more important is the psychological impact it has on the rest of the crypto market. When Bitcoin struggles, altcoins almost always feel the pressure even harder. Investors tend to pull money out of riskier coins first during uncertain periods, and that creates stronger selling momentum across the broader market. Right now, traders are watching key resistance zones near the 50-day and 100-day moving averages very closely. If Bitcoin cannot break above those levels, confidence may continue fading. On the downside, analysts are paying attention to a critical support area around $70,500. If that level breaks on a daily closing basis, many traders believe a much deeper correction could begin. That possibility is creating hesitation among buyers because nobody wants to enter aggressively while the market still looks unstable and global tensions remain unresolved. Ethereum is also under serious pressure today, and the second largest cryptocurrency by market cap is showing signs of weakening momentum as sellers tighten their grip. Ethereum has slipped below $2,100, and from a technical perspective, the setup remains bearish in the near term. Similar to Bitcoin, Ethereum is trading underneath its major moving averages, including the 50-day, 100-day, and 200-day EMAs. These indicators are now acting as layered resistance levels overhead, limiting upside recovery attempts. Every time Ethereum tries to stabilize, sellers continue appearing near those resistance zones. Momentum indicators are not helping either. The relative strength index is hovering in weak territory, while the MACD histogram remains negative, showing that bearish momentum still controls the trend. Even though short-term rebounds may happen occasionally, the overall structure suggests Ethereum bulls still have significant work to do before regaining control. Traders are especially focused on Ethereum's support area around the rising trend line near $2,074. This zone is becoming extremely important because if buyers fail to defend it, Ethereum could experience another sharp wave of downside pressure. Market participants know that crypto sentiment is already fragile, so any technical breakdown could quickly accelerate panic selling. On the upside, Ethereum would first need to reclaim the 50-day EMA before traders could even begin discussing a stronger recovery scenario. Beyond that, additional resistance levels near the 100-day and 200-day EMAs continue standing in the way of bullish momentum. Until those levels are recovered, many analysts believe Ethereum remains trapped inside a bearish structure, where rallies are likely to be temporary and heavily sold into by cautious investors. Now let's talk about XRP because this is where many retail investors are focusing their attention right now. XRP has dropped below $1.35 while maintaining a bearish short-term outlook. However, unlike some other assets, XRP is still attempting to hold above a very important support area connected to the supertrend indicator near $1.32. This level is becoming critical because if sellers manage to push XRP below it, market confidence could weaken significantly. XRP is also trading below its major moving averages, including the 50-day EMA around $1.40, the 100-day EMA near $1.47, and the 200-day EMA around $1.68. Those resistance zones are now creating strong overhead pressure, making it difficult for XRP bulls to regain momentum, despite continued community optimism surrounding Ripple's long-term future. Momentum indicators for XRP are also showing weakness right now. The relative strength index is hovering around the 40 level, which signals that buyers are struggling to build strong momentum. At the same time, the MACD histogram remains in negative territory, reinforcing the idea that rallies may continue, facing selling pressure in the short term. For XRP holders, this creates a frustrating situation because every recovery attempt appears limited by cautious market sentiment and macroeconomic fears. Investors who were expecting XRP to break out strongly this year are now facing a market environment dominated by geopolitical tension, inflation worries, and declining risk appetite. Even though XRP still has one of the strongest and most loyal communities in crypto, technical indicators suggest that traders remain defensive until broader market conditions improve. One of the most important things happening right now is the connection between global politics and crypto market behavior. Some investors still believe crypto exists outside traditional financial systems, But moments like this prove that digital assets are deeply connected to global economic sentiment. When tensions rise between major world powers, investors immediately move towards safer assets and reduce exposure to high-risk markets. That is exactly why Bitcoin, Ethereum, and XRP are all seeing increased selling pressure at the same time. Traders are no longer focusing only on blockchain development or adoption news. Instead, they are reacting to geopolitical headlines, inflation data, central bank policy expectations, and fears about global economic slowdown. Crypto may be decentralized, but investor psychology remains tied closely to global events, and today's market action is a perfect example of that reality. Another factor adding pressure to crypto markets is uncertainty surrounding inflation in the United States. Investors were already concerned that inflation may remain higher for longer, which could force the Federal Reserve to maintain tighter monetary policy conditions. When interest rates stay elevated, liquidity often leaves speculative markets because borrowing becomes more expensive and investors shift towards safer opportunities. Now, with geopolitical tensions adding another layer of fear, many traders are becoming even more cautious. That combination of inflation concerns and international instability creates a difficult environment for crypto to rally strongly in the short term. Even positive developments within blockchain technology are struggling to overcome the heavy macroeconomic pressure dominating investor sentiment right now. Despite all the fear, there are still traders who believe this correction could eventually create major buying opportunities. Historically, crypto markets have experienced sharp declines during periods of uncertainty before recovering strongly once confidence returns. Some long-term investors argue that moments of fear are often where the biggest future gains begin. However, timing remains extremely difficult because nobody knows exactly how the US-Iran situation will evolve over the coming days. If diplomatic talks succeed and tensions calm down, risk appetite could improve quickly across financial markets. But if the conflict escalates further, crypto could face another powerful wave of selling pressure before stabilization finally occurs. That uncertainty is why many investors are remaining patient instead of rushing aggressively into the market right now. For XRP specifically, the next few trading sessions may become incredibly important. If XRP can successfully defend the support area near $1.32, buyers may attempt to stabilize the price and build momentum toward a recovery. But if that level breaks decisively, bearish sentiment could intensify rapidly. Traders will also continue monitoring Bitcoin because XRP's direction often follows broader market behavior. If Bitcoin remains weak, XRP could struggle to gain independent strength, even if Ripple-related developments remain positive. This creates a challenging environment where technical analysis, market psychology, and geopolitical news are all influencing price action simultaneously. XRP investors are therefore watching every update very closely, because sentiment can change extremely fast in conditions like these. What makes this moment so fascinating is that crypto markets are reacting not only to technical signals, but also to emotional behavior from investors around the world. Fear spreads quickly in financial markets, especially when uncertainty dominates headlines every hour. Social media discussions, breaking news alerts, and speculation about future military or diplomatic developments are all contributing to volatility. Traders who were extremely bullish only weeks ago are now becoming cautious, while short sellers are increasing pressure across major cryptocurrencies. At the same time, long-term holders continue arguing that temporary panic should not overshadow the broader adoption trend of digital assets. This clash between short-term fear and long-term optimism is creating one of the most emotionally charged environments crypto investors have seen in recent months. As we move forward, all eyes will remain on the negotiations happening in Doha and on any additional developments involving the United States and Iran. Markets desperately want clarity, because uncertainty is currently driving most of the volatility across crypto and traditional assets alike. Bitcoin, Ethereum, and XRP are all sitting at critical technical levels, and the next major headlines could determine whether the market stabilizes or falls deeper into correction territory. Investors should expect continued volatility because geopolitical tensions rarely resolve instantly, and market sentiment can shift dramatically based on even a single statement from political leaders. For now, caution continues dominating the crypto landscape, while traders wait for stronger signals about where both global politics and digital asset markets are heading next. That's the latest update here on XRP Insider. The crypto market is entering a very sensitive phase where fear, uncertainty, and geopolitical pressure are all colliding at the same time. Bitcoin remains under pressure near major resistance zones. Ethereum continues fighting bearish momentum below key moving averages, and XRP is struggling to defend important support while traders search for signs of stability. Whether this becomes a temporary correction or the beginning of a larger market downturn may depend heavily on what happens next between the United States and Iran. One thing is certain, though. The next few days could be extremely important for the future direction of the crypto market. Stay locked in, stay informed, and keep watching XRP Insider for the latest breaking updates shaping the world of crypto.